Hey guys, Desi here, and today I just wanted to show you like a quick video on how I draw my zones for supply and demand, and how I basically take trades based off of it. So I already have my SPY zones all labeled, so I think it would defeat the purpose of me actually drawing them. So I'm just gonna go over to QQQ because I don't really trade it, and I don't really have anything marked on the actual chart itself. So I think it'd be good for everyone to have be on like the same pace here. So first, what I like to do is start off on the 5 minute chart, especially when we're ranging here. Like we've been ranging for the last week and a half, whatever. I like to get on the 5 minute to see where we are bouncing from and what could be possible, like entries on puts and calls. As long as if we don't trend or whatever. So the first thing on this chart which catches my eyes is these two clear rejections here. This was on August 1st and this was on August 2nd. And I'm looking at these two rejections, even three, because this is also on August 1st. We came and retested and rejected. I'm looking at the price structure, and just seeing how we pushed up, we came up, and then we rejected these levels. So at this point, what I would do is I'm like, okay, this is a point of interest. This is a point of interest. Let me switch on to the 1 minute and see what's actually going on here. So when I'm going to the 1 minute, right, I'm looking at QQQ here, and I'm seeing all these candles getting rejected here. We got this wick up here. We got this inverted hammer, inverted hammer. We come over here. We got this little scuffed head and shoulders that really formed, which brought us even lower. So I would start off by drawing one of my supply zones here. This is a zone because the price is above it. It could act as a demand, but if price is still below it and still trying to break through, like if you would draw this on August 1st, it would 100% be a supply zone. So I'm looking here and I'm looking at this, where price is getting rejected from. So we had a point of interest also right here at 317.7. 317.7, as you can see here. 317.7, also point of interest here. And where is about the top? So usually I draw it off the wicks, not actually the candle close. So I know a lot of people would have it at 318, about 50-ish. I would personally would have it at 318.7, 75-ish. So I'd go right here on Trading View. It's the fourth one down. It's the rectangle. I would just draw my zone something all the way across here like this. Something like that. The top of the wick and the bottom of the zone would be this pivot point right here. As you can see, once we broke the bottom, we absolutely fell. So now moving on to like when it breaks and how you know. So obviously this is a price action just happening on August 1st and 2nd. I extend all this all the way through. Even if when price isn't here, I would extend this all the way through, just like something like this. Make sure I don't mess with my zone. Something like this. I would just extend it just to see how the next day would play out if we do break above it or retest it or whatever. So we go back on the 5 minute here. And you can see that on August 3rd, we had this gap up, right? We had this gap up. And we gapped up all the way and pretty much broke the zone without any real struggle. As you can see here, this was probably EMA test. Yep, this would like they matched it with the EMAs with the price of the candle. So EMA test here, and then this is where I'm interested. So if I'm watching this zone break, and if you don't want to chase calls here because you think it's too risky, we just broke the zone. Here's what I'm waiting for: this rejection right here. This is how I would know if this is a true breakout of the supply zone. So we had this tweezer top here, perfect tweezer top, and we come and retest the EMAs. We come lower and test the EMA, or we test 9 EMA. We get a little quick bounce, but nothing really too convincing. Then we get this knife candle, and we push even lower. So here's what I'm watching. I'm watching for the bottom of the zone to be tested, or somewhere in the middle of the zone to be tested, and see if buyers are eating up the price when price does push down lower here. So as you can see, when price pushed down here, we bullwicked off the bottom of the zone, perfectly off the bottom of the zone at 317.6, and we came tested the 21 EMA on the bottom, which we did. Buyers ate this price action up, and they started pushing the price back up and break over the 9 EMA. And somewhere this bull candle above the 9 EMA close would be a perfect entry, as we claimed this supply zone, and now it has become a demand zone. Because price broke above it, and now it's acting as support or as a zone that is where buyers are stepping in, and there's a lot of buy orders placed here. Tape shows a lot of green here versus what it did before when it was red, and a lot of sellers were stepping in and selling their orders here. So that is exactly how I would play my my zones. And how would you know if when price is gonna pull back? after a break of a zone, personally what I do is I look for like psych numbers, right? We tweezered off this 320 level, which is perfect for psych level. 315 is a big level, 320, 325. Basically, whole numbers are really like good for for pullbacks or rejections. So what I would have done is even before this, I would have just thrown a line here at 320 and see how price reacts. 320 is going to be a big level for QQQ because that is, again, what's the psych level, and a lot of orders are there. And what did we do? We perfectly tweezer topped off of it, and we needed a healthy pullback anyways. We were so overextended at this point. We needed a pullback, and we needed to retest the zone. You do not want to be chasing calls. You could play the breakout of the zone, but I feel like it's more risky compared to playing the retracement of the zone and then playing the pushback up. So now when you look at this on the 1 minute chart, you can zoom out here. Look how nice this looks. This looks absolutely beautiful. We had this one test here, two tests. We came down, we rejected. We came back up, rejected again. And then we had the gap up, or the gap down, and we went for the gap fill. Rode the EMAs all the way up, got rejected at that 320 level, and perfectly came down and tested the bottom of the zone. You could also take these right here, but personally, I would you could take these candles right here to the upside, but they're personally more risky because I think that using the 5 minute as a confirmation of a breakout is just a little bit safer, especially on 0-day contracts. You don't want to get burnt. So personally, I switched over to the 5 unless I'm taking like a really risky play, which I'd let you guys know. I'm sizing it lighter, but I will take it off the 5 minute confirmation of the zone break. All right. So that's one way to identify how a supply zone turn into a demand zone. As you could even keep pushing this to the right here. You can see this price has been bouncing off this for a minute now. So you could expect another come down. Expect another bounce. If not, you'd wait for a 5 minute. You wait for a breakdown and then retest on the 5 minute chart. So it looks something like this. Real quick, just so you guys could know. Let me see. Where's the drawing tool? So it would be something like this. So imagine we just came in knife, right? And we came right knife under. We would have something like this where we are consolidating here, 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 and then we come back down like that. If we don't, obviously if we don't bounce. All right. So where would I draw the next zone at? So now I'm looking. All right, we claim 320. We're pushing up. And first of all, I'm always looking at the first major rejection. So I wouldn't really consider these rejections because they're still above the EMAs. We're just kind of chopping here. And I would look and I would just throw, for now, I would just throw a horizontal line here and see if price breaks above it or below it and see what it actually does. And we retrace to this level right here. Give me 1 second, let me draw it out. So we retrace to about this 320.75 level, right? And personally, this is when I would know when to draw it as a zone. So I would look back at the 5 minute, I'm like, okay, let's see if there's actually previous price action here. And as we can see to the left here, we did get a few candles that were chopping around here, which needed to build some strength. We tweezered and we pushed up to the upside. And once again, we came back to this level and we tweezered again, and we pushed up to the upside. And what did we do right here? We rejected around the same level as this 324.50 level, about 50 cents off. So now I'm looking at this as a possible zone that could be built for buyers who need to break through and where sellers are really stepping in strong here. So what I usually do is I would take off the horizontal line and then get my rectangle back out. And I'll draw it off from the second rejection off of 323, about 85, and draw it all the way to the top of this wick right here where we first got the initial rejection at, around 324.80. So it'd be something like this, and I would draw it upwards, and then obviously I would drag it right away just to see when price comes back. And as you can see, now this is a tough level here. So now we're getting a lot of sellers stepping in at the 324.50 level, and every time we do get near it, we are getting rejections. We try to break out here, we couldn't get a breakout here, and we came in and ultimately gap down on August 5th. This is the August 5th gap down. So this is how I would draw another zone, and this is how I would personally play this zone. So I'd go to the 1 minute here. Let's go to the 1 minute. So let's play the first initial drop. So something like, so playing the 1 minute, personally I don't like taking the first rejection of a zone because I really don't know if it's going to hold up or not. And we would have this trend drawn here, so you really don't want to take puts off a trend, here's what I would do. This is exactly what I do. I wait for the retest of the zone and see if we're gonna break through it. Was it just like a temporary zone, or is this gonna be a zone where we're gonna be stuck at for a long time? So now when price is pushing back off, we got the trend line bounce. We're pushing back up into the zone. I'm looking for puts here. I do have a small bias at this point because we did get just rejected here just previously, like a few candles ago. So I'm looking at the 1 minute and I'm waiting for this candle right here. This is the candle I'm looking for puts. So we get the wick. We did close under both EMAs, and now we're chopping under EMAs and just wick testing them, wick testing them, wick testing them, wick testing them. So personally, what I like to do is on this candle right here, this shows me a lot of sellers are stepping in. This candle's still a lot of indecision because we haven't got above the EMAs. We got this retest of the EMAs. I would be like, yo, stop loss is above these EMAs if we do get a breakout. But as you can see, price did not get this breakout. So entering puts off these wicks right here is good risk to reward because one, you're getting rejected from a supply zone and you have a chance of really pulling back a good amount. And second, you know exactly where your stop loss is in case we break above the zone or break above the EMAs and get back into the zone. I don't really like trading in the zone. I'd rather trade outside the zone on a breakdown or a breakout. And then it's simple, like we teach you, just write the EMAs down and we get about $1.50 rejection. This is 0 DTEs, columns run about 100% quickly because it's 5 candles. SPX will probably run a little bit more because of the pressure of these candles. We got the wick retest here, a lot of sellers here, and then we get this hammer candle here. And we come and retest the EMAs and curl back off. So let's go back here. Alright. So that is how I would play the supply zone rejection. And same thing here, similarly. And then we're looking at this gap down here on August 5th. We did get pretty close to the zone. I know this is the same zone I was talking about on SPY. Let me just go to the SPY chart real quick. I know I was talking to saying that because it looks a little bit cleaner on SPY. I was like, yo, I'm tempted to really take puts here off this gap down, like at open. Like this was 5 minutes before. I'm like, I'm gonna take calls, excuse me. But personally, I didn't take calls until about retest of the zone and breakout. But yeah, same thing on QQQ. We got pretty close to the zone here. It's not always gonna be perfect on SPY. It looked a little bit cleaner than it does on QQQ. And then we push back up, push back up, push back up. Gap fill into another supply zone test, which we tweezered and we absolutely broke down again. Surprise, surprise. This is why you always got to keep your other zones up as long as they validate. Rejection, rejection, bounce, bounce here. And then we got this little cup and handle, I think, forming right here. I don't know if this is going to play out. I doubt it. I think we are going to gap down. And then you could draw this as like another resistance point. I wouldn't draw a zone here. I would just draw like a horizontal ray. Something like that to see where we're getting rejected. And it actually lines up perfectly with this bounce here. So you could think about this as just a support turning into resistance here. So we get another test, probably come back down and go down further into this zone. So I think this zone for upcoming week for QQQ, at least for those who pick QQQ under 317.80 is going to be like a big pivot point to, and it could drop all the way down to like 314, 312 level. So that is how I would draw personally my QQQ zones and play it off the 1 minute. I gave you guys some examples of that. Obviously, psych levels, watch out for those because they do tend to be bouncy, especially during range days, which we've been getting for the last week. I hope this made sense. It's a very kind of a basic understanding of supply and demand and how I use the EMAs to play with it, how to play puts or calls based off of it. And yeah, so that's what I have for you guys today. I hope this helped, and let me know what you guys think.